Ladies and gentlemen, I have some big news to share with you. It's actually from Hassett. He says that we're probably going to get some trade deals done this week. Mix that with other catalysts like economic data and earnings. You could see a pretty explosive move to the upside. Here in this video, we will go over just that. But let's start with the headline from Hassett. Look at this. Hassett predicts flurry of action on trade next week. So kind of hyping up some trade deals that could get done next week. And again, I could be wrong. The speculation could be wrong. You may get, sporadic trade deals that are announced. Hassett is kind of suggesting that. Hassett says when a deal is close, Trump will meet them in person. Okay, so first and foremost, some of the headlines that came out over this weekend, specifically yesterday and today, the White House says that Trump discussed trade with UK's Prime Minister Starmer and will visit the UK later this year. So that's the UK, Italy, Japan. Okay, these are countries we know are currently in negotiations for a trade deal. Now, unfortunately, for some people, I don't think we're going to get deals announced sporadically, right? Like you're not going to get a deal on Monday and then get a deal on Thursday. I think it's probably going to happen all at once. Like Trump's going to set a date, get people excited, announce all of the trade deals. That's at least what the speculation is right now. So we'll see. And the U.S. has also set out the latest terms for a ceasefire for the war in Ukraine, which that's good news. But at this point, is it going to move markets? Probably not. The U.S. is ready to recognize Crimea as Russia's in Ukraine peace deal. And also in the news over this weekend, there is more of these Iran nuclear talks. And Israel says they will not rule out an attack on Iran's nuclear facilities, that they're actually thinking about a limited attack on Iran's nuclear facilities, which is kind of backpedaling on what you'd call progress. Now, Putin has ordered an Easter ceasefire in Ukraine. Ukraine has acknowledged that as well, that they will participate. Now, Ukraine actually asked for a 30-day ceasefire. So that is definitely a sign of progress. Now, Japan is considering relaxing automobile safety rules for imports as part of tariff negotiations with the U.S. This little bit more details on what these trade negotiations could look like is something I think the markets should like. Also in the news, Britain says that their fighter jets intercepted 2 Russian aircraft flying near to NATO's airspace over the Baltic Sea. Now, the big story for this week is going to be, in part, earnings. Tomorrow morning, you have a lot of banks in after hours, just mainly banks. Tuesday is when things really start to kick off. You have Verizon, GE Aerospace, Lockheed Martin, RTX, Halliburton, Quest Diagnostics, Allegiance Health, Synchrony, and Kimberly-Clark. Now, Tuesday and after hours, things get really going here with Tesla, Intuitive Surgical, Enphase, SAP, Capital One, Baker Hughes, Steel Dynamics, Range Resources, Weatherford, and Zurn Water Solutions. Wednesday in pre-market, you have Boeing, AT&T, Vertiv, Next Era Energy, Philip Morris International, GE Veranova, and Virtue Financial. Wednesday and after hours, you have O'Reilly Auto Parts, Alaska Airlines, IBM, ServiceNow, Chipotle, Newmont, Texas Instruments, Lam Research, and Las Vegas Sands. Thursday in pre-market, American Airlines, Nokia, Southwest, Merck, PepsiCo, NASDAQ, Union Pacific. Thursday and after hours, Intel, Alphabet, Celestica, T-Mobile, Boyd, Vail, Skechers. And then Friday in pre-market, you have SLB, AbbVie, Colgate, Phillips 66, Centene, Charter, and a couple of others. So bigger companies reporting, obviously, Tesla, Alphabet, Intel. These are going to be more of your important companies. Now, let's face it, though, if Wall Street is concerned about tariffs, we're probably tariffs, what effect tariffs could have. I don't think Tesla and Alphabet are really the companies that are going to tell us a whole lot on that. Now, Tesla's going to tell us a lot about consumer demand and about order flows. Hopefully, they're painting a good picture there that the economy, the consumer is still doing okay. I think we all learned a lesson from 2022 though. Like, if demand is bad, Tesla will cut prices. They will incentivize. They will do things differently that we're not seeing right now. So I think that's a pretty good sign that demand is at least good for Tesla, which is what you'd hope to see. Alphabet, it's a large, market cap company. I think the bar is set low for all of these earnings. And Alphabet shouldn't be like a huge tariff target. I don't like digital taxes maybe, but from what I can tell, Alphabet's like not a super impacted company versus something like Apple, right? Apple's going to be more important. Amazon's going to be way more important this earnings season. Nvidia is going to be way more important this earnings season, even though Nvidia is technically not under the tariffs. What they have to say about AI and demand, those things are going to be important. So this week, while earnings, there's going to be a lot of them. Different industries, different sectors. I even think Capital One Tuesday and after hours is going to be important for the state of the consumer. Chipotle Wednesday and after hours. Again, consumer. There is going to be important earnings. I just don't know how much of a conclusion we're going to draw from this week, if things are great or not. Obviously, if Capital One, Chipotle, and these other consumer-related companies, Tesla even, have positive things to say, then that's going to set the tone potentially for this week and maybe even earnings season, that maybe we got a little bit too nervous and cautious on the economy. Maybe it's not nearly as bad as we think. Current betting odds still have forecasts for a recession around 50% for this year. That is the highest since 2022. And that's why markets are where they are today. Now, as far as economic data coming out tomorrow morning, you have the CB leading index month over month, 3-month and a 6-month bond auction, but it's going to be a pretty slow day overall. Tuesday, you're going to get Fed Jefferson, Fed Harker that speak in the morning, Richmond Fed Manufacturing Index, services revenues, manufacturing shipments at about 10 o'clock in the morning, Fed Kashkari that speaks at 2 p.m., Fed Kugler that speaks at 6 p.m. On Wednesday, you're going to get Fed Beth, Fed Goolsbee, and Fed Waller, S&P Global Composite PMIs, manufacturing PMIs, and services PMIs. New home sales for March and new home sales month over month. 5-year bond auction. Thursday, you're going to get initial jobless claims, durable goods orders month over month. You're expecting a really strong number there. So, that's a good sign for the economy if that number comes in good. Chicago Fed National Activity Index, continuing jobless claims, and existing home sales, Kansas Fed Composite Index, Manufacturing Index, 7-year bond auction. So Thursday is really going to be the volatile day as far as economic data, specifically with durable goods orders and initial jobless claims. On Friday, you're going to get final numbers for April's consumer sentiment report, 5-year, 1-year inflation expectations, consumer expectations, and current conditions, all of which will be important. I mean, Michigan consumer sentiment has been one of those catalysts that people just keep talking, or data sets that people just keep talking about. They're actually paying a lot of attention and putting a lot of weight on this data as of recently. CNN Fear and Greed Index is sitting at 21. You're still in extreme fear. There's still a lot of room to move higher. And the way that I kind of look at markets right now is things are going in the right direction. That's obvious to say. Earnings probably going to be better than expected given the current low expectations. I think to continue to get like large downside in markets here, you need to see the economy deteriorate further. So far, that doesn't seem like it's happening. You need to see earnings just be absolutely pitiful, which is not happening, at least so far. We'll see in this upcoming week. Or you need to see trade deals really falling apart. And Hessen said, again, this weekend, that you're probably going to see a flurry of trade deal activity in this upcoming week. Like that's about as good of an indicator or sign that you're going to get some trade deals announced this week. I mean, all of it seems to be moving in the right direction. So after getting that shot of fear, it's like, okay, it's probably, getting better, right? It's kind of like going skydiving or something for the first time. I feel like this is a good example. I've never been skydiving and I would be terrified. But I feel like if I went once, I would get the fear out, right? It would just be fun the next time. That's usually the case with everything, right? You do it the first time and then you're like, okay, it's not nearly as bad. That's kind of like this market. It's going to be hard to get that peak level of fear the second time skydiving after the first time. You're not going to be as nervous or scared the second time, even if you are still scared, right? And to get markets to really move lower at this point, we were down 22% from our all-time highs. To hit a new low, I think you need to see more fear come into this market. And to me, that just seems unlikely at this point, unless things, again, on trade really start to fall apart. Now, sentiment for the AI Investor Sentiment Survey is still very bearish. Still a lot of room to improve here. There's over 2 times as many bears than there is bulls. Bulls are at 25.4%, neutral investors at 17.7%, and bearish investors at 56.9%. Over 2 times as many bearish investors than bullish investors, like for like 5-6 weeks now. That's I can't recall a time where that's happened when it's been this low for this long. Again, just highlighting how negative markets are right now. Now, the percent of stocks trading above their 50-day moving average currently sitting at 19.22%. This is kind of like the lows you see during large correction events, like in October of 2023, like at some of your lows in 2022. This is still at a very low level. I mean, just like a median is like 50 to 60%. You start to get on the high side when 70% of stocks or more are above their 50-day moving average. You're not even close to that. You could triple from here before you're like overextended. And honestly, I think we're probably due for a larger, kind of even bear market rally if this is a bear market rally. And I think you could even see a test of your 200-day moving average around 570 if things go right this week. So I think it could be a big week for markets. And again, with just the backdrop I've given you guys in this video, I'm optimistic. I would say cautiously optimistic. I'm prepared for both sides here. If things go good, then I'm prepared and I'm going to benefit. If things go bad, I'm prepared and I will benefit by being able to buy lower. And I think that's the best way to position here. The only people that are really going to lose are the ones making huge bets on one outcome. Like if you're making a huge bet, markets are going to fall and they don't, you're going to get screwed. If you're making a big bet, the markets are going to rise, you're all in margin, you're going to get screwed if they don't, right? If you're playing both sides here, if you're positioned for the upside, if you're ready for the downside, that's a scenario I don't think you can lose with in this market. And it's all about the long game here. Okay? You don't want to lose in the short term. You don't want to lose the battle and then lose the war, right? Even if you lose the battle, you still want to win the war, okay? And that's just, again, a metaphor for how you are positioning in this market. And I think Trump has really showed us one thing above all else. Prepare for the unexpected. Because literally one headline can destroy this market. So let me know what you guys think about this down below in the comment section. Happy Easter. Have a great rest of your day. And I will see you in the next one.